Hi traders, quick minute or two on where I'm seeing the markets. This is gold on the weekly chart. Back in very early August, I said I saw gold at 1800. So gold was powering up. We've hit the 2072 mark. And here we are right the way down at 1850, having come from about 1380. So a massive move. It's my taxi driver move. If all the papers are full of buying gold, everyone's talking about buying gold, you can sure enough, yeah, if you get a market that's too extended, this is the Bollinger Band by the way on the weekly. If you come out of the Bollinger Band and back inside, that's one indicator that this market has just got way too hot. I do think gold is going to get a lot higher, but only once it's come down to a price that that the masses are going to want to buy again. So here we are selling off. So if these markets are so bearish, why is a safe haven like gold coming off? Well, let's look at a couple of other indicators and then work our way through the market. This is the VIX, the volatility index, and it is elevated, surprise, surprise, on a daily chart here. But all the time we stay under the 30 zone, and we're just above 30 zone, 32 at the moment. If we can stay come back under the 30 zone, then this market stands a chance. If we keep creeping higher, then increased volatility could see these markets dip further. Okay, but with gold selling off, the volatility index still relatively modest. For example, in August we had a good market, the best August for decades I think. Volatility index was nice and low, so we've come into typical this time of year anyway to see an elevated volatility, but at the moment, having seen that in the early part of September, we are potentially falling off. So keep an eye on that. So whilst these markets are very volatile, and here's the NASDAQ on the daily chart. So we've come off from great highs. So again, same with gold. We just got too high. We just, you know, the oscillators, the MACDs, everything just got too far away from the averages. And markets love to come back to the mean average, you know, perfect pricing. So we've come back to this support level from July and come underneath it. If we subsequently close above here, then we could at least see another leg up in the market, and that's what I'm expecting, possibly a little further dip. But if we subsequently close back above this 10,800, then I think we can do some retracing. And I think the main culprit, one of the main culprits, is Apple. So here we have the Apple on a daily chart, having done a share split, 4 for 1. And I think we're coming down to 100. Once we come down to 100, we're currently 107 as I speak. If we dip to 100, I think that's going to find a lot of buyers. Markets love big numbers. We might even dip underneath 100, but if we find ourselves holding that at some stage in the coming days and weeks, then I think we can get a push back into late autumn. Which around the election time, and then it's anyone's guess as to whether that market's going to continue or waver and potentially pull back again. Okay, so I'm using Apple as a main sort of benchmark here. Okay, in the meantime, I am still buying dips. For example, in the UK market, we've got BT here, just buying into BT today. It's in my pink zone. My pink zone is just nice and simple, major support, major resistance in some cases. I do think this pound is going to hold, and I think BT is just undervalued. So this is a good price for me to get in, and I'm still looking for this to end the year on 120. Okay, so I'm looking for a 20% move in BT. Alright, if you want to find out more about this, then drop me a line. Just about to launch the newsletter at long last, and if you're interested in day trading and capturing some of these moves, then let me know. I've just switched to the daily on the Dow with just nothing but the 20 and 50-day average. You can see we've crossed here. We've got a bearish cross at the moment. Again, divergence in the oscillators. Got some distance away from the averages. Coming back down to the 50, came up to the 20. Now we're coming down into support. So I think if we can find some support around here, and with 26.7, I think we could come all the way down to these late July, early August lows at 26,000. That would make sense. I think that will get the market interested again. Buyers interested, I should say. And at that stage, I think we could push higher. All right, but as we are experiencing a rise in COVID cases, the death level at the moment is low, hospitalization is low, and vaccines are getting closer. Obviously that's going to take, I'm not expecting that, personally I'm not expecting vaccines to be ready until about Easter at the absolute earliest. Okay, so, but that's irrelevant. Price action is the most relevant case, and we are having had some selling over the last couple of weeks. Through the usual volatility in September, we are potentially coming into some deep, very good pivot levels, pivot support. Okay, there are some discounts available on the day trading program if you're interested, but certain conditions apply. In other words, I've done a deal with an extremely good broker. So you can see we're just coming into these March support levels. So if you want to find out about the discounts available, then let me know. All right, drop me a line from the website, tradetheeasyway.com, and look forward to hearing from you. Okay, bye for now.